2026, if Bitcoin gets to 200 or 250,000, it would be breaking the 4-year cycle. I said, come on, baby, turn the lights off. 'Cause it's getting late.
Happy New Year, everybody. 2025 was a banner year. If you watched this channel in 2025, you caught every major move in the market and in crypto. The April tariff derangement sell-off lows. I gave you the support level. I gave you the timing. I told you the rally was coming in. And then we had the big run up to new all-time highs as predicted. And then we got to the later part of the year. We had the volatility in October. We got a pullback. And then in November, I said expect another pullback and new all-time highs, whilst everybody else told you the market was going to collapse. I called the low for Bitcoin a week before it happened. We talked about longing Ethereum, Solana, Bitcoin, and now we have new all-time highs in the markets, and I expect new all-time highs in crypto this year as well. So we're going to get into all of it here with this video, so be sure to stay tuned and listen to the whole thing. Guys, as you know already, I don't get supported by YouTube. YouTube doesn't promote my videos. I would appreciate it if you like, if you subscribe, and if you share these videos out to your friends. I would love to see you guys on our Discord. You can join with the join button right there on YouTube. You get access to all of our videos, the market updates, the indicators, the education, and of course, chat with us, hang out with the community on Discord. You can support us as well. If you want to trade the markets, check out SimpleFX, check out Bitunix, two fantastic exchanges. They are in the video description. Check them out, be a Market Makers VIP. Let's talk about what's going on in the market and why I think so many people are wrong about where we are in the market because they don't understand the cycle. And I'm talking about some guys that I've liked, that I've watched for decades, have no idea, in my opinion, where we are in the cycle. So let's look and see. You guys, I know a lot of people, the bullish people, are comparing to where we are right now with the 1990s. That's a good analog. I'm probably the only person, at least that I've seen, comparing where we are to the 1920s. That's an even better analog. So let's set the table real quick. I'm going to walk you guys through charts. You can look at the timestamps below, but I think you should listen to the beginning here because we're going to talk about the cycle and the wealth to expect, because I expect epic gains for the decade, not just a year or two, for the rest of the decade. So listen to this, but let's talk about where we are. 1920s. I made so many videos on this in 2025. 1920s. How did the 20th century start? The 20th century started in 1900 with the market getting cut in half. Fast forward 100 years later, how did the 21st century start? With the market getting cut in half with the dot-com bust. Then fast forward 1907, you have the crash of 1907, the market gets cut in half. Fast forward 7 years in the 21st century, you have the great financial crisis, a housing bubble. The market gets cut in half. Fast forward to 1918, the Spanish flu. The Spanish flu occurs, the market gets cut roughly in half. The Spanish flu ends in 1920. Fast forward almost exactly to the year, you have the pandemic of 2020. The market gets cut by about 40%, almost in half once again. This is the 100-year cycle. Within the 100-year cycle, you have the decennial cycle. The decennial cycle is important to understand because more times than not, it plays out. Lee, throw up this chart. if you guys watch Larry Williams at all, when he fantastic trader, big trader 80s and 90s, he does his annual forecast as well. You've probably seen this chart. We recreated this chart. In the decennial cycle, you have the importance of each year of the cycle. All of this work comes from Edgar Lawrence Smith in the 1930s. He discovered the decennial cycle. But if you look at years ending in 6, 85% chance the market ends higher. This will be for crypto too. Will end higher than it is now. 85% chance. That's 200 years of data of years ending in 6. So when you look at the decennial cycle, you have to understand some key elements. Year 5, which we just had, in 2025, the strongest year in the decennial cycle. The second strongest year is year 8. Then you look at the sub-cycles. What do you have as a sub-cycle in year 8? You have the presidential election. We already went through this. We saw how they will inflate the market, add stimulus to the economy to hold this up for the election. Year 8 lines up beautifully. Now let's just look at the actual charts of how we have played out here in the 100-year cycle. Going back, remember there was no S&P, there was no NASDAQ, using the Dow here. Where we are right now. Where were we 100 years ago back in 1926? Back in 1926, we were right here, January 1926. What did the market do after it had its correction? A correction, by the way, that was a strong correction in 1926. The market sold off 17%. It topped out in mid-February. It bottomed out here in just about a week or so after the spring equinox. Then what did the market do? It went up. It doubled all the way out to September 1929, a 185% rally. You can say, Brendan, but how does this, you're looking at a chart that's 100 years old. The economic conditions were certainly different. Well, let's talk about the economic conditions. Again, I've made videos on this all through 2025. Do your economic research. You're not going to see this on the Big Financial Podcast. How did the 1920s start off? Well, there's a big sell-off with the Spanish flu. It got cut in half. What did the Republicans do in 1922? The Fordney-McCumber tariffs came in. Does this sound familiar? The tariffs came in. Tariffs as high as 200%. This was done to promote growth and have pro-growth policies, as well as deregulation, as well as lower taxes in the 1920s to bring up and prop up American industry. Does this sound familiar? The Democrats hated the idea. They said it would crash the economy, and you got the 1920s, the roaring 20s out of it, and the stock market went up 500%. By the way, the average effective tariff rate was 40%. Trump's average effective tariff rate, 100 years later, is about 13 or 14%. By the way, inflation, because you hear the inflationistas, people like Peter Schiff, oh, inflation is just going to keep going higher and higher. You can't stop it. Inflation for the decade of the roaring 20s was under 2%. I believe it was about 1.5 or less, 1.5% or less for the entirety as the average of the decade. Do you know what inflation's doing now? Because tariffs are deflationary. Lee, throw up Truflation. That's right. Inflation is dropping like a rock. I used Truflation on the way up when Truflation told you inflation was 23% back in 2021 and the government had a 9% number. I'm using Truflation on the way down, a more accurate way to measure inflation. This is going to be a booming decade for American economy, American industry, and the stock markets. Deregulation, pro-growth, lower taxes. You're going to see the stimulus in the economy for explosive price action. Now understand, Wall Street, 80% of the money donated to political campaigns goes to the Democrats. When Kamala Harris was running against Trump, she broke records in Wall Street. A complete moron broke records in Wall Street. Most of Wall Street is Democratic, just like academia, just like the media. So this is going to be the best time to be a contrarian trader, just like in April of 2025 when everybody told told you the market was collapsing. This is it. It's finally here. I told you the market was going to rally to new all-time highs, and rally it did. Now let's look at the year itself here in 1926. 1926. What is something that's interesting here to me? We had a 16%, 17% correction that started in mid-February. So there's your first correction. Then you rally up to a new all-time high. And then in August, you get a second correction in 1926. So it was a double correction year in 1926. Let's get that second correction measurement as well. You had a 17% correction, followed by a 12% correction. And then after that, of course, massive gains to the end of the decade. And by the way, you correct all throughout here. You correct again in 1927. You correct again at the end of 27, beginning of 28. It's normal to get these corrections, these big movements, but you had a double correction in 1926. Harping on that because it's significant. Let's look at the analog of the 1990s. 1990s, this is where you hear a lot of people on Bloomberg, CNBC saying this is just like the 1990s. They're using different metrics to track it, from magazine covers to the announcement of Netscape when that became a thing, and they're tracking it by days. Let's just look at 96. January of 96, right? Here you are, January of 96. You are here, ladies and gentlemen. Do you know what the market did from 96 on? I mean, just look at this. This is the S&P. So here you are in January of 96. Well, you rallied up 159.5% to close it out in March of 2000, to close out the decade. Amazing rally. But you know what else is fascinating about the 90s analog with the 1920s? Decennial cycle here. You're seeing a lot of similarities between them. In the 90s, 96, January, mid-January, you rallied up into when? Into February. Then you correct it mid-February. Then you rallied up again into May, and then you corrected again. A double correction in 1996. Let's measure this. Your first correction, this is on the weekly time frame. You top out mid-February. You correct, well, actually it qualifies a pullback 6%, right? You pull back 6, you rally up into late May, and then you correct 11%. So you had a 6% and 11%, and then you finish 96 higher than post-correction. You finished a year higher, just like the chart I was showing you. And then you went up 160% to the end of the decade. By the way, when you look at this in the 90s, because you're going to see that this year, right? This is a year for trading. This is a year for trading. And after we finally put a final low in and have a big move up, you're going to see these corrections all through here. Right now, 96, this next correction that we come into, guys, we're going to talk about it. But what I'm looking at is a bullish Q1. So I'm looking at a bullish Q1. We're going to get corrections. You had a double correction in 1926, a double correction in 1996. You could easily have the same type of thing, but every time it corrects, you will see your George Gammons, who has major TDS. You'll see George Gammon. You'll see who are those guys that keep going on David Lynn, Gareth Soloway, Chris Vermillion. All the same people that go on these podcasts or have their own podcasts talking about black swans, talking about a market collapse. That cartoon chicken guy they keep trotting out, he said the market would collapse if Maduro left Venezuela. Well, he's out. Market didn't collapse. He said the market would collapse with the Iranian thing that we ran into with the bombings in Iran. Market didn't collapse. These guys say the same thing. They don't understand the cycle. You're going to lose a shitload of money if you listen to people like this the rest of the decade. Every single time you get a normal, healthy correction after gains, they're going to tell you the market's collapsing. I got an Elliott wave count. I have a schematic of Wyckoff. We're in distribution. I'm just telling you how I think this is going to play out. And I think we're in the 1920s, the 1990s, and massive gains are ahead. Let's look at something else, because you could say, well, I don't care about the markets. Your 100-year cycle theory is very interesting. I care about crypto. Well, crypto didn't exist 100 years ago. Crypto didn't exist in the 1990s. What's a good analog for crypto? You guys hear me say it all the time. Beta Tech, the NASDAQ. What did the NASDAQ do in the 1990s? Where are you on this chart? You're here. Believe it or not. You are here. January 96. So it follows the same correction structure, obviously, as the S&P, the largest market in the world. Let's look at what the NASDAQ did between 1996 and March of 2000 when it topped on the weekly time frame. This is a NASDAQ 100. 814% gain. Massive, epic gains are ahead. Let's look at some of these correction sizes because they're not small corrections. You're going to get them all through here. After 96, we had the double correction. Let's just find a larger one here. Here's a larger one. Going down here, this is back in 96 into July, 19, almost 20%, right? 19% correction. And 96, it had the double correction. You look at 97, you had a nice another 17% correction. Some of these are large. Look at this correction you did in 98. 98, almost a 30% correction. These types of moves are going to happen in this market, especially in today's day and age when everybody has a phone, everybody has a trading app, everybody's plugged in on X or TikTok. However you get your news, you're going to see massive swings in the market. If you zoom out and understand the cycle and the big picture, massive gains in the market are ahead. Let's continue down this road. Let's look at the RSP. Now, when we look at the RSP, this is equal weight. This is breaking out to the upside as well. Let's start off with Bitcoin on the beach ball chart. What we have here is a beach ball marking each previous cycle high. So going all the way back to 2013. In 2017, when the RMA crossed the beach ball of the previous cycle high, the top for 2017 came in within 4 to 5 weeks after crossing the beach ball. This repeated again in 2021 top. We crossed the 2017 high. The RMA crosses the beach ball. Within 4 to 5 weeks, we get the significant top 75% drop. We have not crossed the beach ball, which needs to cross, the RMA needs to cross 69K to cross that. And that should be telling you there's a significant top. Now, the argument or the debate's going to be, are we still going to get these traditional 75% drops? Well, what if this drop came in right on time with the crypto liquidation? What if that drop got reduced? What if that was the drop? That's something interesting. So we'll see what happens when the RMA crosses the beach ball. Could still mark a significant drop, a significant top, followed by a drop. Maybe it's not going to be a 75% drop like in previous history. Maybe it's 20, 30, 40% like we just did here after this big sell-off with the big top in October. That is the unknown part. But right now we're at 65K and change. We need to cross 69K. Once we cross 69K, if this cycle was to repeat, we should have a very significant top and a very significant drop like in 2021 and 2017. Let's move forward. The bearish case for Bitcoin. If you truly think everything's over, this is out there for you bears because I was showing this all throughout 2025. The 3 peaks in a domed house pattern. Peak 1, peak 2, peak 3. Domed house is your head and shoulders. And I've been saying this, whether you are bullish or bearish, Bitcoin will rebound to test 108 to 116. Right here to make that right shoulder. If it is to be bearish, if it breaks out to the upside, you're going to new all-time highs. My 2 targets, 154, 172 for those new all-time highs. But this is your bearish case. Again, whether you're bearish and you think it's going to 70, 30, 10, $5, whatever you think it's going to, this move, I believe, is happening 108 to 116. I've been saying that since we made the bottom, okay? So I haven't changed on that at all. I expect new all-time highs, but this is the battleground, 108 to 116. That's where you want to see that battle take place. We look at Bitcoin here on the daily chart. Fell right to a key support RMA. This was accumulation. Remember, based on this lunar cycle chart, this is a lunar cycle chart, I called the low here in Bitcoin a week before it happened, and Bitcoin bottomed the day after the lunar cycle, and it has been up since. Specifically, you're up right now 17%. You're up 17% from the low, and many people still don't think it's the low. They still think it's going down to 70K or lower. You're coming up to test 108 to 116. Let's move forward. We look at Bitcoin here on the 3-day chart. You can see, what have I been saying? 94K above it is where the fireworks will happen. You're trying to cross it right now, 93,942. You want to get above it, stay above it. You'll be on your way to 108, 116. That's the key important part here of this chart. That's going to be the battleground. That move will happen, and that's going to be a nice rebound off of that 80K low. You're looking at 45% rebound, 36,000 Bitcoin points to the upside to have the battleground. You look at some of the indicators here, 3-day chart. We got oversold on the RSI. You're just now at the median line. Plenty of room to move to the upside. Volume stronger. Momentum is starting to get a bullish cross and turn to the upside. You want to see this volume on your volume delta break above the midpoint to give it more velocity to move to the upside. Again, that's the battleground, guys. I personally expect new all-time highs. We bring this down to the daily chart. Looking at Bitcoin on the daily, there's your 94K. I mean, again, there's my 5 RMA crossing bullishly above the 18. You're fading out right at that 94K. This is your ceiling to break out of. You can do this a couple different ways. You can do a typical Bitcoin breakout. You get some big, strong up candles. You could come up, pull back, find support at the previous level here and pull back up to the upside. This could play out different ways. Overall, the trajectory of higher lows is what I want to keep in place here and get above 94K. Even if you pull back to a higher low, get above 94, start making your moves towards 108 to 116. That's the direction I believe we are headed. Let's look at Bitcoin here on the daily. Daily RSI is bullish, volume is bullish, momentum is bullish, and you see it in the price action. We'll look at total because this is the money in crypto. Same exact identical setup as Bitcoin. Strong support from our long-term RMA here. You have the 5 RMA, the 18, bullish cross. You need to break above 3.2 trillion, come up to 3.5 trillion. Ultimately, 3.68 to 3.94 is going to be your battleground, and that should coincide with Bitcoin being at 108 to 116. So again, this can come up different ways. You can get your typical Livermore pivot, break out to the upside. You could pull back a little bit deeper, then come back up. There's a bunch of different ways it can play out. Important thing is, upside is the trajectory, I believe, for price. We'll look at Ethereum on a 3-day chart. Your battleground is going to be 4,063 to 4,456 right here. Ethereum needs to break out, get above these highs, specifically these highs like 3,250. You're at 3,200. Bitcoin's right at 94K. Makes perfect sense. You're going to start seeing this movement. You're going to have resistance at 3,500. 3,800, ultimately 4,100 or 4,063. Let's just call it 4,100 to 4,500 is where this is coming, where it will resolve to the upside or you will break down. Okay, I believe it's going to resolve to the upside. My higher targets are 6,400, 7,100 with Fibonacci confluence. That's where I see Ethereum going. People are so worried about the intraday movements, which I get. If you're trading on small time frames like hourly, 15-minute, you're looking at these intraday movements. I'm looking at the cycle and the natural rebound targets for such a big sell-off and a rebound. You have a tendency, whether it's markets or crypto, to come up to your kill box, 618, 786, and you can see it in Ethereum. We felt a key support right at the 618 from the April lows, right? We haven't taken out that low, and Ethereum is up. It has been up off that rebound as high as 31%. And as of right now, as we're talking, it's up 23%. This is volatility. This is accumulation for a rebound to the upside to test peak resistance, 4,100, 4,500. We look at our RSI on the daily, bullish. We look at the volume on the daily, bullish. You look at the momentum, bullish. It wants to come up, okay? So I think we're going to see all these things push up to key resistance. This does not mean, if you're watching this video a couple days from now, this doesn't mean it gets to 3,400, 3,500, comes back down, does something like this, and then breaks out. And people say, oh, you were wrong, it came back down. You have to look at the trend. If your trend of higher lows is in place, you're above the 18 RMA, this is totally normal to have swings up and down. The trend is what's important. You've been in a long accumulation trend. All the sell-off trends happen much quicker on Bitcoin, which is obviously the largest crypto. Bitcoin was distributing for like 17 days, then it would landslide down another level. Bitcoin was going sideways. I'm going to talk about it, might as well show it. Bitcoin was going sideways for much longer this time, going back to the Bitcoin chart here. Bitcoin was going sideways 44 days down here in accumulation. And previously, when it made that last attempt to try to rally up, previously it was 15 days and then it had a landslide down, right? So you've almost tripled the time. So you've been accumulating, buying and selling. All the panicans have been exiting. People have been freaking out. Crypto's going down 80%, blah, blah, blah. You're right up here at 94K again, looking to punch through. So that's what I'm seeing, and I'm seeing the same thing on Ethereum. You're going to have volatility up and down. See if your trend holds. Hold the higher lows. Ultimately, you're building a coil, and this coil is going to resolve as it compresses and eventually punch out to the upside where you will head towards 4,100 to 4,500. If we look at Solana on a 3-day chart, 144 is the key number to get above and hold above. You're at 137 right now. You dipped all the way down into the 1-teens. Down here, what was that, 116, 116.85. You're up at 137. Again, this to me is accumulation. 3-day chart. You put in a pivot low there, came back up. You're going to find some resistance right around that 144 area or slightly lower. But the key is if you pull back, are you holding a higher low before you punch out? That's the key. Ultimately, your battleground is going to be 203, 225 on Solana. If it can take it out, going to 335. If it fails, you're going to be breaking down from there, okay? Again, we're going to see this in the markets as well. So we'll get to the market charts here after we get through crypto. Solana on the daily. Well, actually, let's look at Solana on the 3-day chart as far as the indicators. Again, you've floored here on the 3-day chart. You got oversold. You're coming up to the median line. Technically, you're still bearish. You have momentum coming up on a 3-day chart. You can see you're right at that line of resistance up here. You see momentum, or on volume, momentum starting to curl to the upside. 3-day chart's going to lag. Weekly's going to lag even more. You look at the daily chart indicators. You're bullish on Solana on the daily. Volume is bullish. Momentum is bullish. So everything's bullish on the daily, and you're above the 18 RMA. You want to break out above 145. And again, it can come up, could find resistance, it could pull back. People will think it's crashing. It's not, as long as you hold your higher low series. It's pulling back before breakout. You can look at these levels right above you, 172, 187. Ultimately, I think you're coming up to 200 to 225 right in here. That's going to be your battleground to see what Solana does from there. Break out to the upside, you're going into the 3s. Let's look at XRP. XRP is not waiting. It held that support line we've been talking about, $1.82. Like a champ, you threw some wicks down, shake some people out, get the weak hands out of there. Broke above your trend line, broke above the 18 RMA. XRP is on a nice pump. It's up 8% right now as I'm recording. Daily chart, up 8%, 225. Ultimately, where you're going, 278, 317, 618, 786. That's where you're going to go for a battleground. Take that out, you're going higher. If not, you are breaking down. Let's jump over to the market. So let's get into the markets here. RSP equal weight, about to make, I mean, if you closed right now, it's about 2 o'clock in the afternoon, you'd have a new all-time closing high here in the RSP, but you're right at all-time highs, holding a key support level, trying to build an accumulation base, a Livermore pivot. You're above the 18 RMA. That's bullish, okay? We look at the Russell. Russell's right up here at all-time highs again, above the 18 RMA. Nice move on the Russell, 1.74% today. Want to break out above 2605 because ultimately I have the Russell going to 3,000. Okay, so after 2605, you're going to 3,000. We look at the Dow, new all-time high as everybody tells you the market's crashing. New all-time high in the Dow. So the Dow's at 49,446. look, that next level is 50,492. I mean, it's right around the corner. After you take the 1618 out, you have 53K above you. The Dow is pumping. It is up 1.7% on the daily chart. We look at the S&P right near all-time highs. You're at 69.54 on S&P futures. You need to take out 69.91. All of my targets for 2025 were hit. The exception of Bitcoin fell slightly short. Had 69.91. I was calling it 7K on S&P futures. We hit it. I had 132K for Bitcoin. Bitcoin got to 126 and change. The NASDAQ hit its target. Everything hit its target or got extremely close to target. And guys, I think new all-time highs are ahead. But you're going to see the S&P. You look at your W pattern, right? We have this beautiful W pattern. We have a 5-wave fractal here that's played out beautifully so far. You have 2, 3, 4, you have your 5th wave, you made the new all-time high, you pulled back, hit the 18, bouncing back up again, get back above 7,000, you're going to 7,500. That's your next stop, okay? After 7,000, 7,500 is your next stop. Let's look at some indicators on S&P futures. Bullish RSI. Volume pulled back. Need this to break out to the upside. Momentum still staying bullish. You have a majority of the stocks still above their 20. So everything looks healthy. It doesn't look exciting. You would never know you're right near an all-time high. And why is that? Oh, because the market's in neutral. Remember when the market was in extreme fear back in November at a 5, everybody told you the market was collapsing. So you just have to understand how these markets are functioning and how importantly the sentiment's functioning. Let's look at NASDAQ futures. NASDAQ came right up to target for 2025, which is just about 26K. We got above it actually, 26.4, and now we have the volatility. But again, to me, this is an accumulation spiral, just like on the S&P futures. 5-wave breakout, looking for the breakout, but you have a low, you have your all-time high, you came in for a down thrust, made a lower high, higher low, higher high, higher low. You can see the compression here in the spiral, and this is going to break to the upside towards 28.2 is the next step for NASDAQ futures. You look at the spider, looking for that move up to 713 here on the spider is the next level target. It's just based off this narrower range here. Ultimately, you're going to be looking at 750 up here. As you see the S&P or specifically futures get to 7,500, you're going to be looking at 750 on the spider. So again, it's the same thing, guys. You have this spiraling accumulation and a W fractal compressing. You have your low, you have your high, higher low, higher high. Right now, higher low, holding above the 18, and you might get another little pullback, but eventually I believe this is breaking out to the upside. First near-term target is 713.71, ultimately moving to 750. You look at the Qs, 679 is your next target. Both the spider and the triple Qs hit their targets for 2025. You got the exact same identical pattern holding above the 18. 679 is where I want to see this go. You got to break out. You got to get above 626, ultimately 637. You'll be on your way to 679. You'll see this obviously in the NASDAQ as well. We look at Tesla. Tesla, we had our target of 462 hit beautifully right here and right here, and we got above it finally and pulled back. People say, nope, that's it. Tesla rally's over. Tesla's not over. It's going to move up to 521. If it can take out 521, ultimately you will see 616. Okay, you had a sell-off pullback. You had a breakout to the upside. You have a higher low in place right now with Tesla going sideways. I believe it's accumulating for the next leg up towards 521. We look at Hood just to keep track of this. Hood is trying to find stabilization. As of right now, near term in a daily chart, you have a series of higher lows. You came up for a rally retest at the trend line, failed, but you're holding this higher low. Once this is done doing this bouncing around, it's at 120, 121.79. Key level to take out is going to be 152 because that was the 2618 target, and you broke down from there. But again, this is starting to turn sideways. See, this is sell-off. Wave down, wave up. Bigger wave down, wave up. Another wave down, didn't take the low. You're accumulating going sideways, which makes sense because it's beta, it's a popular retail stock, and the markets are going to push higher. If we look at coin, same thing. Coin's had its big sell-off, waves of selling, right? lower high up here at the top, then a big wave of selling, and now you're going sideways right at a key juncture of support down here to 233. You're at 256. Gap up right now. You want to see this hold. Ultimately, you got to get breakout above 284, and this is coming back up. First near-term targets are going to be 363 to 400 ultimately, where the battleground's going to be, right in this area. And then you got to see, is Bitcoin going to break out? Because this is a stock proxy for Bitcoin. But is Bitcoin going to break out, or are you going to be putting in some type of triple top? Well, that's kind of an easy answer if you think about it. If Bitcoin gets hung up at 108, 116 and sells off, what do you think coin's going to do? It's not going to go up if Bitcoin's going down. So if Bitcoin breaks out of that range, you're going to see coin break out of that range. Let's go ahead and wrap this video up, because this is a very long video today. I hope you guys enjoyed it. Be sure to like and subscribe. Leave me some comments, even if it's just for the algorithm. I enjoy reading your comments. Follow me on X at Market Canary. See you guys on the next one. Hope to see you on the Discord.